If you're just establishing your credit or correcting any prior mistakes, understanding the factors that improve your credit score will set you up for success down the line. Now, your credit score doesn't really change on a daily basis, but taking small steps to improve your score makes it more likely that you'll qualify for financing. And it's especially the case if you're planning on a big purchase in the next few years, like a home. So if you want to invest in your financial health for something down the line, then you can use these 5 steps to improve your credit score. Well, first, what does your credit score mean? So your credit score is a number, and it ranges from 300 to 850. It's calculated based on a number of factors, and individually these factors may not seem super impactful by themselves. But when combined, they will make up a number that tells lenders whether you qualify for financing, or loans, credit cards, mortgages, and more. In general terms, your credit score number can signify the following. Scores from 300 to 600 are considered poor, 6 to 660, those are fair, 661 to 780 are good, and 781 to 850 are considered excellent. Now, the better your score, the better your odds that you'll both qualify for financing and receive lower interest rates. If you have poor or fair credit, you might still be approved for financing, but your interest rates will likely be high. The lower your score, the more invested you should be in improving it. But what affects your credit score? It doesn't require daily monitoring, but checking on it once a month or so ensures that you're on the right path to an excellent score. And there are a number of factors that organizations use to calculate your credit score, like payment history, credit card usage, derogatory marks. Those have a higher impact on your score. Credit age, total open accounts, maybe the number of hard inquiries. Those have an impact on your score as well. Okay, so now that we've covered some of the specifics of credit, let's talk about 5 simple steps that you can take to make improvements to that score. Now keep in mind, these steps will take effect over time, so one on-time payment may not have much effect. A year's worth will have more, 10 years, a lot. And number 1 is don't miss payments. That's the first step on your journey to improving your credit score, because making your payments on time proves to lenders that you have a history of doing so, that you can make good on payment plans, and it'll also lower your overall debt. So to accomplish this, make yourself a guide to all your monthly payments, include the amounts, the date they're due, whether you've paid them or not, and then throughout the month refer back to make sure that you're on the right track and haven't missed anything. It can be hard to keep track of where funds go and what needs to go where, so you can make a budget in Excel, in Google Sheets, or maybe even other online platforms like QuickBooks or Mint or many of those others. Once you've got a good handle on your monthly budget, then you'll notice your credit score can start to improve, and generally you want your payment history to reflect at least 97% on-time payments. Number 2, limit credit checks. Okay, with new or poor credit, the likelihood of a lender passing on your application gets higher. So while you're establishing credit or rebuilding credit scores, you should limit the number of credit checks on your report. So try to avoid applying for a ton of credit cards. In general, try to keep these hard credit checks to once every 6 months to a year. If you're going to be applying for a loan or a mortgage in the near future, try to avoid credit checks at all costs. Most hard inquiries will stay on your report for around 2 years, so choose wisely. Number 3, address derogatory marks. Now, derogatory marks are added to your credit score when you fail to pay a lender back for funds that they issued you. Once your account is closed due to delinquency, your lender will pass your debt on to a debt collector, who will do just about everything they can to get you to pay back the money that you owe. This delinquency will be reflected on your credit score as a derogatory mark, and it will cause an immediate hit to your credit score. Derogatory marks can appear for amounts as little as $1 and up to any maximum, and they stay on your credit report for 7 years if not addressed. And these remarks have a massive impact on your score. So if you notice a derogatory mark on your credit score, you need to address it. Now, alternatively, if you see a derogatory mark on your credit score and you don't believe it belongs there, you can dispute it, either directly with the company or through a credit reporting agency. Credit Karma might offer this kind of service. And that dispute will tell you definitively why the mark was added to your score, and if it's incorrect, it could be removed entirely. Now, number 4, make extra payments. If you've checked your score and don't have any immediate concerns, your next course of action can be to make extra payments towards your debt. Doing so can both increase your credit score and save you money on interest. Now, when determining where to make extra payments among the different sources of debt, you can go with one of 2 options. Number 1, pay off the debt with the lowest balance so that you can pay that debt off more quickly, and then you'll get 1 notch up on your monthly budget as eliminated. Plus, it just feels great when you pay off a debt. Number 2, you could pay off the debt with the highest interest. This could be a money saver as you're making payments on the item with the greatest potential to end up costing you more in the long term. And number 5, build your credit age and your total number of accounts. Now, the last step you can take for improving your credit score is just to allow your credit to age. This is especially the case for those who are just starting to build credit. Now, though credit age doesn't have a huge impact on your score, lenders favor borrowers with more history to evaluate. So by forming good credit habits, paying off debt, you'll automatically build your credit age. Similarly, if you're in good standing with all your debt and not looking to make a big purchase right away, then you might open a new account, and that can improve your credit score. Consider that you should resolve any derogatory marks and stop any missing payments before you take this kind of a step. And keep reminding yourself that as you take these steps, it takes time to improve your credit score, so keep at it. Even if you immediately implement all of these 5 steps, you're not going to see any immediate changes to your score. That's because your score is calculated primarily using history with lenders and making payments. So it's going to take some time to get your score to where you want it to be.